Good afternoon and welcome to Executive Talks by AC Capital Markets. I'm Samantha Woon, and today we are excited to welcome Shane Walton. Now, Shane has spent the better part of the last decade actively investing and working in the financial service industry, a contrarian thinker and investor at heart. Now, Shane is an independent analyst with extensive financial markets experience, including stints at a major FTSE-listed brokerage, consulting firms, fintech startups, and AI investing platforms. Now, let's welcome to Executive Talks, Shane.
Thank you so much for that introduction, Sam. It's really great to be here to share some insights about the markets.
Excited for the talk. Now, let's get straight into it, Shane. So the days are counting down to the US election. From both candidates, Trump and Harris, what policies and positions should investors be paying attention to right now? What do you think?
Yeah, that's a really good question. I think a topical one right now. So we're 39 days away from the US election. It can obviously have big implications for financial markets as a whole. And I think on the whole, though, there is a bit of ambiguity from investors about what Trump and Harris will do. Trump often has the ability to switch between positions quite readily, and Harris has been airdropped into this position as a presidential candidate from Biden. So there's a lot of pressure there. But across the board, I think investors will be looking at a few main things: their policies around inflation, taxation, and also trade. Antitrust will also likely feature heavily. So on the Harris side, there is less focus on tax cuts, but she's going to look to boost the small and medium-sized businesses. I think investors will look out for that. She has been overly critical of Trump's approach to tariffs, which are quite high in comparison to hers. And I think if we look on the antitrust side, we could see Harris really continue what the Biden administration has done to date. Now, on the Trump side, I think this is where things get really interesting. Trump is a volatile character, to say the least. The core to his promise, really, though, is to end inflation and to make America affordable again. That's kind of a spin on his previous "to make America great again." How he does that, again, there's not much detail or color per se. He's talked about actually lowering interest rates, something that he can't do. I think something we'll touch on a bit later as well is the US Fed lowering rates. So we're already kind of starting that cut cycle. But I think the really big thing for Trump, it's going to be lower taxes. That's going to probably be an extension of his 2017 cuts. He went very hard there, both for personal and corporates. We'll likely see that continue. But then also tariffs of 10 to 20% on imports. He's threatened to tax Chinese tariffs even more. Not potentially a great move there. But really, I think from both sides, there's a lot of ambiguity what will happen. Markets obviously don't like that ambiguity. There's not going to be a second debate, or at least Trump doesn't want to partake in one. So I think wherever investors can, they'll be looking for more color on where both candidates stand.
Mm-hmm. So I just want to go on something that you mentioned earlier. This antitrust, right? So the DOJ recently launched its antitrust case against Google. Now, can you elaborate on how you see a Trump or Kamala presidency handling this antitrust?
Yeah, no, it's quite an interesting question. So both candidates haven't explicitly mentioned how they'll handle antitrust, but there's definitely some hints in either Trump's vice president candidacy or what Biden has done in the past. So to be clear, both Trump in the past was very heavy on antitrust. They went after a number of very big tech companies. Trump has a dislike for Facebook and has commented quite heavily on that. In fact, going as far as to endorse TikTok as an importance for boosting competition. Quite interesting there that Trump will be such a TikTok fan. But that can also be said of Harris, right? So Biden has been very hard on big tech as well. I think here, both Trump and Harris are a bit more similar than would maybe meet the eye at the start. I think both are going to look to crack down on big tech. We have this situation where everyday Americans are struggling. While inflation has come down, it still remains elevated. And over the last decade, we've seen big tech just get bigger and bigger without really much cap on what's going to stop that. I think we are going to see something stop it. It's going to be regulation from either the Republicans or the Democrats. And one hint that I would take is a relatively bearish thing for antitrust is Trump's VC candidate. So JD Vance has explicitly said that he would look to break up Google. He's also very much directed positive commentary towards the current FTC chair, Lena Khan, going quite interesting there to comment positively on a Democrat election. So I think whatever happens, it's going to have big implications for markets. Google has underperformed a lot of its tech peers in the last 12 months, whether that has to do with antitrust or broader skepticism around the potential impact of AI on Google's search business is something that's quite up for debate. But it is going to be interesting to see how this plays out. I know there's been stirrings in the market that there could be action taken against NVIDIA, another big winner in the last 18 months. So really, we're just going to have to wait and see, I think.
So you do think that this will act as a headwind for big techs as a whole?
Yeah, I mean, I said this before, right? So big tech has essentially been an unstoppable force for the last 10, maybe 20 years, depending upon how far you want to stretch it out. They've continued to grow their earnings, their revenue, their market share. Nothing has really been able to stop them. And in fact, it's been quite unprecedented, I would say, in the history of capital markets, the status of big tech, right? So people often comment, the general thinking is that big tech is overvalued. They usually will say something like the market trades at 15 times earnings on average. And if you look at big tech companies across the board, they're trading upwards of 30, sometimes even much higher than that. I think NVIDIA currently trades at a 56 PE. So they are richly valued. But the question that I would pose to investors and traders is that valuation justified? Are these tech companies that have been relatively unassailable for the last decade doubly as good as the market average? I would say potentially they are much better quality companies than that. And that explains the valuation gap between the average.
Okay, so zooming out, right? We recently saw the Fed cut rates 50 basis points. Now, can you elaborate on the significance of this decision?
Yeah, so this is obviously a big event for markets. So the US Fed cut 50 basis points. They took the Fed funds rate to between 4.75 and 5.0%. The market didn't actually react to that positively. Stocks were down in response to this. And obviously, we've seen inflation be very high in the last 18 months to 2 years. It is coming down right now. Just looking here, in August, inflation was 2.5%. The economy is also doing much better. I think that really galvanized the US Fed to make this decision. While growth was slow in the first quarter, in the second quarter, it really picked up to 3.0%. And a lot of economists are expecting it continue to go that way. While some have commented, they've made some relatively, I guess, extreme and bearish comparisons to 2001, and 2007. That's another period when the Fed cut interest rates 50 basis points. So this kind of mega cut. I would say the state of the economy, though, is in a much better state in the US than it was when those cuts happened in the last place. I think we are really looking at a soft landing here. The Fed has got inflation under control. I think stocks, they're up, obviously. In saying that, there are some things we have to look out for, right? So will inflation flare back up? That's happened in the last 12 months. Readings have been lumpy there. That potentially would be a bearish signal from investors, but also the geopolitical risks that we're seeing on a global level. I think investors really need to pay attention to that. I think while the inflation story may be done, the US Fed has definitely got that under control. I think that's positive. I think the geopolitical story is what investors will be looking for next. The war in Ukraine, while the markets have paid less attention to that in the last year, it continues to rage on. And then we have the conflict in the Middle East. which could potentially exacerbate oil prices, potentially see another spike in inflation. There is a lot of risk in this sense that is unknown, but I think the Fed has done all that it can, and it has done ultimately a good job there.
Right. So Shane, how about the RBA, right? So post rate cut, what views do you have on what RBA is going to do next?
That is a good question, right? So Australia's RBA, our central bank, we often like to play follow the leader with the rest of the world, especially when it comes to the US. I don't think that's going to happen in CY24, however. So if we look at some of the stats, we saw that inflation was down to 2.7% in August, which is a positive sign. But if we dig a bit deeper into the numbers, we see that this was mainly driven by subsidies and electricity prices, and also oil prices falling. These things, the RBA has said, are not necessarily permanent facts and aren't going to really factor into whether it cuts rates or not. Not only that, but Australia's economy and our labour force in particular are very strong right now. We've had 47,500 new jobs added in August. Things are still running very well. If we are going to see a rate cut, I think it's going to be in February of next year. I think they want to wait and see in the data what is going on just a bit longer. So the US Fed, just going back to US markets for a bit, right? So the US Fed was much more aggressive in their rate cuts, rate rises, than Australia. I think we have seen inflation be a bit stickier than that in Australia because the RBA did not go as hard or as fast. I would be a bit concerned. And if I was an investor, I'll be looking out to see if inflation remains stickier for longer in the next few readings that we're going to get. So I think that is going to be really important. But I also just want to go back to the to US markets for a second, right? One thing I think that's really important that we need to keep in mind as investors and into this antitrust thematic is the presence of the Magnificent Seven. So these are the seven really big stocks that have been driving equity markets in 2023 and in 2024. And I think these stats are kind of miraculous, right? So in 2023, these big seven stocks returned 106%. And then 2004, halfway through the year, they're up 33%. They are dominating the market. And the big thematic here really is AI that is playing into all of this. And I guess a question for investors as we close out 2024 is, how real is the AI thematic? There's definitely been a lot of hype in Australian markets, in US markets. We've seen the big tech companies and even smaller tech companies be significantly re-rated by the market off the back of this hype. I'm a bit skeptical though on what this hype actually means going forward, right? So it's been projected that these tech companies will spend upwards of $1 trillion of CapEx to build out their AI capability. Obviously, companies like NVIDIA, they will directly benefit on their top and bottom line from this. Whether companies like Meta, Google, whether they will actually benefit from it, or put it another way, whether the efficiency gains they get from AI, whether that's from increased marketing capability, better coding, reduction in customer service costs, these are just some of the kind of use cases that have been floated by investors and by companies, whether that materially impacts these companies' bottom line to justify these re-ratings. It's something that deserves scrutiny, in my opinion, because if this growth doesn't come, I think we could see a sharp re-rating of these companies. And that obviously is not a great situation. But sorry to get on a tangent there about that tech.
No, I mean, yeah, I think what you said there, it is definitely something to keep an eye on. Yeah. So thank you so much, Shane, for coming on the show.
No, I really appreciate it, Samantha. Thank you for having me.
Yeah. So that's really quite a lot of information for our investors to digest. But we do believe that this is the beauty of executive talks, gearing our investors to the teeth and preparing them for all opportunities. Now, This is all we have for Executive Talks at AC Capital Markets.
Thanks, Samantha. Have a great day.